So AiNGEL is a New York University research spin-off that focuses on using artificial intelligence to help scale early-stage investing. To learn more about how that opens up opportunities, welcome to Amry Shady of AiNGEL.
Hi, everyone. My name is Amry Shady. I'm the co-founder and CEO of AiNGEL. And before we talk about what AiNGEL does, I want to spend a few minutes just talking about the rise of the innovation economy. If you look at 10 years ago, these were the kinds of companies that were topping the stock market. This is the view today. And it's not just in the stock market. Like Danny mentioned earlier, how governments are making these investments in their own innovation economy. And it seems that China is really leading the pack. There's a great article on Forbes that talks about how China is making these investments in its innovation economy through venture capital and through the startup ecosystem. There's more money flowing in the innovation economy than ever before. So we're not at the end of 2018 yet, and we're already seeing a 26% increase than last year in terms of venture capital deployed. And it doesn't seem like it's slowing down. We look at SoftBank and these mega funds that are planning to invest more than $50 billion annually. Banks that are catering to the innovation economy are thriving. Silicon Valley Bank is one of the leading banks that serves the venture capital and startup community. And this is kind of their stock prices and how it's been increasing over the past 2 years. They haven't been having a good month in October, but overall you can see they've been performing around 200% over the past 2 years. Even the startups are tapping into opportunities in the innovation economy. Brex is a startup that does credit card for startups, and they came out of stealth just 5 months ago. They already commanded $1 billion in valuation. But the innovation economy comes with challenges. So these challenges are, first of all, velocity. There are tens of thousands of startups that are launching every year. And it's very noisy because a lot of these startups, as you know, are going to fail. And the earlier you are, there's scarcity in the data that you have around these startups. So what does this mean? This means that if you want to tap into the innovation economy, and you want to do so as early as possible, it's going to be labor intensive, it's going to be inefficient, and it's going to be hard to scale. So let's just take a step back and think about how this problem was addressed in similar markets. Now, it's not really same, but similar. You look at the role of credit bureaus and rating agencies, how they drove efficiencies and how they participated in kind of the sorting of information. Look at kind of what Moody's did for the public markets on the debt side, and the Fair Isaac Corporation with their FICO score and what they did on the personal credit. And you start mapping this out and seeing how, is there any company that's doing this kind of sorting and trying to drive this kind of efficiency in the private sector, for the private sector? And there is. There's actually Dun & Bradstreet. This is a company that's more than 100 years old, and the problem with Dun & Bradstreet is it's kind of old tools focused on more of the classical economy. And that space of sorting information in a meaningful manner for the innovation economy does not exist today. And just to drive this point home, let's take one quick example, Roman Health. This is a company that was founded in 2017, just last year, out of New York, that does online diagnosis and delivery of medication. And when you search for Roman Health on Dun & Bradstreet, this is kind of the ratings report, credit reports, gives it kind of a low viability rating. And this is how DNB looks at Roman Health. If you're going to give a credit line to Roman Health, your aggressive credit limit is $10,000. Roman Health doesn't need the $10,000 because they raised $91 million from some of the top VCs in the US. And this is really what AiNGEL is about. It's about rating the innovation economy. And just to give you an idea, this is a research spin-off from NYU, where the team was really looking at how do we use AI to scale early-stage investing, which led us to basically looking at AI to predict startup success as early as possible when there is little data. And this led us to build the first scoring system for startups based on AI. The founding team comes from banking, management consulting, and to give you the MENA to the world perspective from my side, I founded my first startup in 1999 based out of Egypt, bootstrapped it to a few $1 million in revenue, and given the work that we were doing with mobile operators, we're just accessing billions of transactions on an annual basis, and we really had to double down on our data science capabilities, created a lot of analytical tools, spun them off to Silicon Valley together with our data science team. And in parallel, I started working on my Master of Science in Analytics. And at that time, I was very interested in how can AI be used to find great founders and find great startups as early as possible. And just to complete the picture on the team, Omar is our chief data scientist, also based in Silicon Valley with me. And I've worked with Omar in my previous startup. Dwayne Good is our chief commercial officer. He's the former global chief operating officer of risk at HSBC and VP of Experience. And he comes with wealth of information and experience in building these credit scoring systems for banks that allows them to scale their risk management. We're based in San Francisco, as I mentioned. We have a team in New York, but very proud of also the team that we have in Cairo. We have around 50 people in AiNGEL. I'd say a majority, maybe around 30 or 35, are actually based out of the Cairo office that are doing a lot of the data aggregation, data management for us. Our investors, of course, proudly, we have Beko. Silicon Valley Bank is an investor together with 500 startups and Endure. And let's get into the details of what actually goes into the scores. Now, if we want to look at startups as early as possible, when there's no data on their traction, we decided that we are going to focus on the founders. So what we do is we look at the written content of the founders. We use AI to translate that content to 52 personality attributes. We then look at their work experience, their startup experience, and their education, and we add some collective data around the composition of the team. Then we use the machine learning algorithm we built at NYU that's designed to work on this data set, because what we found was that the traditional approach to machine learning did not work. The output of our machine learning algorithm is the inception score, which is sort of a predictor of success as early as the founding of the company. And our research was very well received by the NYU data science community. Dr. Roy was the founder of the NYU Center for Data Science. He's also the CTO of Thomson Reuters. And he was on our thesis review board. And this is what he had to say. In summary, this is a very difficult problem to solve. It was approached in a unique way. And he actually became an advisor as soon as we spun off that research out of NYU as AiNGEL. And this is my favorite part, looking at sample inception scores. Qualtrics, in the news last week, acquired by SAP for $8 billion, ranks high on AiNGEL, around 88%. GitHub, also acquired recently by Microsoft, around 87. Eventbrite did an IPO just a few months ago, ranks quite high on AiNGEL. And you have to remember, these are scores without any traction data. These are scores when the company was formed based on the founding team. Zora also IPO'd, and no presentation about startups in the Middle East is legit without Kareem mention. This is our Kareem mention, so Kareem's ranks quite high, and interestingly, just a little bit higher than Uber, so congrats for that. And we've done obviously a lot of work on what's the impact of using AiNGEL on VC returns. And I won't bore you with kind of the details of what the slide is all about. What we're trying to say is an artificial intelligence assisted, an AI assisted decision-making process can potentially help improve fund returns, predict which startups are more likely to progress to later stage funding. And it's not just kind of the research that we've done. We've worked with, kind of, this is the number 2 VC in the world in terms of volume or number of companies that have been invested in. So 500 startups, working closely with them. Not only have we scored their past batches, but we've also started integrating with them on scoring all their new batches. And what they've seen is the score's ability to predict the strong follow-on investments. And that's just the start. So inception score, what we started to do is we added more layers on top of that, analyzing the funding of startups. As these startups gain traction, how much have they raised, who they've raised it from, looking at peer comparisons by cohort, other startups that have been founded around the same time, same geography, same industry, and more data points. And what this does is it creates kind of a dynamic score that changes as a startup progresses or as the innovation economy around it also changes. So use cases, currently we are being used for sourcing, so to identify promising startups early, for underwriting to scale kind of the filtering process or the risk management process, both for VCs and banks. And also on the management of a portfolio or monitoring specific prospects or investment opportunities. And kind of to sum up, kind of taking kind of a step back again and looking at what this means, our objective is, as we engage more and more with the VC community and the financial institutes, the more engagement we're also getting from the startup side. And the more access to data we are able to pull from the startups to help investors make better decisions. And as we scale, as we grow, what this means is that we can create more and more of these kinds of success stories where an investor finds a company on AiNGEL, scores high, engages with that startup, and within days, they're able to close the deal. It's kind of driving efficiency into that process. So that's my time. Thank you so much.